Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, March the 25th, 2010, and we have just got the last perfect timing short signal you can ever ask for, and that is the inverted hammer right there. It looks like a hammer, but it's upside down. Okay, this shows support, this shows resistance. All right, exact opposites. This is very bearish. You'll also notice we have good sell volume on the day right here. Okay, get you a little bit better look at that. We're looking at the S&P right now. All right. That's it. There's no other signal to wait for. Everything that you could possibly want for a short is there. You have the extreme extension from the major support. Major support was here. The run, okay? Really good distance from there. So you expect that pullback. You have the overbought condition of the slow stotch right here. All right. You have increasing sell volume. You have the preparation of the MACD right here, MACD. Okay, these two moving averages are preparing to cross on a bearish crossover. That's bearish. You have the overbought condition, extreme overbought condition of the RSI. Everything you could possibly want for a short is right there, and everybody and their mother's uncle should see it by now. So look for increasing on the sell side. I believe this market's rolling over. We're seeing it on individual charts already. If you're not a full access member and you want to be one, go to our website, sign up, pay the $145 for the full year, and you will get access to all of our alerts, including what's in my portfolio and why. You'll be alerted to every move I make in my portfolio as it happens. This is all very powerful information, and for definitely anyone who's a serious swing trader, you want to be there, okay? And at $145 a year, that's a steal of a deal. The Fed did come out today and mention that he's keeping rates unchanged. And let me tell you what I'm thinking about that. We had also the unemployment data came in. It was still bearish. But the Fed's statement that he's keeping rates unchanged simply because he doesn't want to move too early and put extra weight on a weak economy that we already have. Here's the situation. The initial move he makes to drop the rates, that helps the economy. Okay, it gave us a support that we didn't have before. As he continued to hold it there, that helped as well. But now, though it still helps, it also is very telling of how weak our economy is. As we've been in this rally now for over a year, and he's still unwilling or doesn't believe the economy can handle him raising or even beginning to raise the interest rate. I mean, how weak is our economy if he can't increase it a quarter of a point? Not that I want him to. I think he has to in time. We all know he has to just to keep off the inflation issue. But it's really telling to me of how weak our economy really is, and it may be weaker than any of us want to believe it is. That's my overall take on that. Okay. Unemployment again, like I said, it's still really bad. We have um, worse conditions in the housing market than we want to really admit. I think we're going to go lower on that as well. So all in all, I'm bearish here, but another indication that I'm really cautious on here is as your market runs up and peaks and then starts to pull back, and then you get a higher high and higher high I should say, and then you pull back. In these higher high situations, you're not seeing inverted hammers. Okay, that's normal. That's how a real true advance will continue. But once you start seeing the inverted hammer at the peak, okay, right here, then you have to start asking yourself, is this just a pullback or the beginning of a bigger trend developing or reverting back to a bigger trend, okay? In short, I'm basically seeing this as not just a slight pullback, but perhaps the beginning of the end of this uptrend we've been seeing for the past year before we go lower, and I mean much lower. Um, I know a lot of you guys may not want to hear that, but there's fundamentally nothing out there in this market that's telling me to look for bigger moves to the upside. Oracle came in with lower profits. Their profits were actually they missed, so I wouldn't have big hopes for the rest of the earnings season as well. All in all, that's my take and my opinion until it changes. So right now, if I was long, I wouldn't be, but if you are, keep a tight stop. And if you're going to listen to me, then I would say be short or be in cash. All right. See you all tomorrow morning. Take care. God bless and refer a friend.